One of the things that has been weighing down the market is the fall in the rupee. Rupee has hit 86, which is a low, all-time low as far as the Indian rupee is concerned. But we are getting an exclusive from government sources that are now telling us that India's forex reserves are enough to tackle the current depreciation in the rupee. We have my colleague Sumit Chaturvedi who's joining us with the details of that story. Over to you, Sumit.
Reaction coming from government today on the rupee fall, which is touched an all-time low against the dollar. While government is quite confident that the forex reserves are enough for dealing with this kind of rupee fall, India has a forex reserves of over $640 billion as of December 2024, and the highest placed sources in government believe that they can depreciate, rupee can depreciate at the max by just 1% more, and reserves are enough to deal with this kind of situation. Also, they see it's going to benefit the services-led Indian economy and exports that are there for many countries. That's going to get benefit of this rupee depreciation. And last, sanctions on US. Well, that sanctions will clearly will not impact on Russia, will not impact India at all.
Okay, Sumit, thank you so much for joining us with all of those details. Well, the rupee continues to be in a free fall, and global cues also continue to ail the Indian markets as the rupee tumbled to record low against the dollar yesterday. Now, with crude surging post new US sanctions on Russian oil, that's also going to be an interesting development to watch out for. We caught up with a whole bunch of experts to decode the same and the impact that all of these global as well as domestic cues could have on our markets back home. Let's go across and listen into what they had to say.
At this juncture, it's not only us, other currencies are also impacted, but we are impacted more because we kind of remain very tight when the initial outflow happened in August, September, October. The consensus trade is to basically every other market bad, it's only US market. I think at some point of time it will change, and that's when we might start seeing, at least if not new inflows, but at least the exits once they start stop. That's where the currency will stabilize.
We are seeing significant amount of capital outflows. The FPI outflows is unrelenting, and that is keeping pressure on rupee. At the same time, what has changed really is that RBI is not keeping a tab on levels. RBI is not intervening to the levels that we have seen in the past. And that too is allowing more flexibility for rupee to move. Over the last few days, we have seen crude oil prices go significantly higher. And with additional sanctions on Russia, it does further put pressure on rupee. So all of this would weigh on rupee going forward.
The dollar index now pulling back, it's looking quite overbought internationally. So this is a perfect opportunity for the Indian rupee to now to score some gains. Not something significant, maybe around 86.30 or 25 levels it can appreciate to. And overall, it might just stay within a range between 86.25 to 86.70 on the upside.